Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's going on in investment markets and what to look out for in the days and weeks ahead. Now, we had a period where markets were very calm. In fact, if you're an 80/20 investor member, you have received emails with the title about how calm things were and looking at the VIX, the fear indicator in the stock market, and whether there would be a spike very soon. Well, we got that. And it was courtesy of Donald Trump, of all people. Of course it would be Donald Trump. We had NATO this week, a meeting in the UK, and Donald Trump can't help but say something controversial. And in this instance, Donald Trump appeared to re-escalate the trade war tensions between a number of countries. So for starters, Trump decided he wanted to impose tariffs on Brazil and Argentina on their steel exports. And that was just the beginning. There were noises made around tariffs being imposed on selected European exports. And of course, he then started to talk about China. And where we were hoping that tariffs that are scheduled for December the 15th to be imposed on more Chinese goods by the US would be removed, and this phase one trade deal would actually happen before the end of the year, Donald Trump suddenly, in a speech during the NATO visit, said that the trade deal might not happen until next year, but more importantly, until after the 2020 US election. That would put it almost a year away. So the markets reacted negatively. Now, what was interesting at first, the market sold off quite aggressively, but we're not talking about 2%. The market initially was down about 1% across the board, most equity markets. The bond market didn't really do anything, which was a surprise. You would think in a risk-off scenario that people would buy bonds, and in particular US Treasuries, but they didn't. But after a while, that started to pick up. So as the fear index, the VIX, spiked, it was down towards 12, a low that we've not seen for probably about 18 months, and it was a threshold level I've been talking about with 80/20 investor members. It then bounced higher and broke through the 15 barrier, and 15 is a key level. It seems to be a level whereby above there is bad news for equity markets, but below is positive for equity markets. Well, with the news of Donald Trump not being bothered about having a trade deal with China at least for another year, the market sold off, the fear index spiked, and bonds actually rallied. Now, that in itself lasted about 24 hours. So as I make this video, there seems to be a bit of a rebound, and that's because there's been reports that there is actually some progress on this trade deal. But again, it's a bit that seesawing we see. But the thing is, the market is now worried about this trade deal. And like I say, they were hoping that the tariffs that were going to be imposed on the 15th of December might be delayed. And they probably aren't going to be now. We have to see what happens, because if they're not, the market has been pricing in that we are going to get some delay on those tariffs. And if they're not, then we could expect more wobble. So if we look at the indices anyway, the S&P 500 broke down below 3,100, which is again a key support level. It found some support about 3,080. So a bit below there, about 3,075 is another key area, which I think if we broke below that, we'd have seen more selling. But there's some support down by around about 30, that level. So if we go below that, you might want to start to worry a little bit. On the US Treasury yield, which is always a good indicator of bond markets, that actually pulled back down towards 1.7, which if you go back 2 weeks when I made the last video, when I talked about markets themselves, that's about the level we had 2 weeks ago. So it's not a major risk aversion event that we've had, but it's enough to spook markets. So the FTSE 100 fell down towards 7170, but if we take equity markets in the round, generally speaking, this wobble was the worst one-day fall we'd seen in about 2 months. So it wasn't anything too drastic, but we have to see whether it's start of something bigger. And of course, we've got the Santa rally that could possibly be coming, which I talked about last week. Could this derail that? Now, if you also look at the other big move that we've had, it's the pound. Now, the pound has broken above that key $1.30 level. We've been butting up against that resistance line for some time, and it looked like we're going to break higher, and we eventually have done. And that is mostly around the UK election. And the more we get polls that suggest that the Conservatives will win, the stronger the pound is likely to get in the lead up to it. And now, if you want some context, if we keep pushing up between $1.30, which we did, we'll probably very quickly go to 131 and even 133. And of course, the upside even higher is about $1.38. So that isn't necessarily going to happen in the near term, but if the election goes the way the polls suggest it will, then don't be surprised if we see that over the next 12 months. So whenever the pound rallies, it's bad for the FTSE 100, which is one of the other reasons why the FTSE 100 has actually struggled this week. So looking on into the future, at the end of next week, it's going to be pretty busy. So we've got the US-China tariff situation at the end of the week. On Thursday next week, we've actually got the UK general election, and we've got the Federal Reserve having an interest rate meeting, which they could cut rates or they may keep them the same. I think markets have been pricing in that they won't do anything, but it's always a possibility of a surprise. And if there is a surprise on any of those events that I've mentioned, then you could expect some volatility within investment markets. So that is it for this week on Damien's Midweek Markets. We've got a big week coming up in front of us. So if you want to get in touch with me, you can do the usual way. Damien@moneytothemasses.com is the email. Twitter is moneytothemasses with the number 2. And of course, you can get in touch via Instagram and our Facebook page. And don't forget to subscribe to our YouTube channel.